COSATU, of course, has been meeting all week, and one of the major focuses of that union's get-together has been job losses and potential job losses in the mining sector. In the studio in Cape Town with me to discuss this is Tim Hughes, who is the CEO of a company called Diplocom. Tim, thanks very much for coming in. Before we get into what might be happening in the sector as outlined by France Bellany from the NUM, I'll read you that in a second. Let's talk about Diplocom first of all. What is it?
We're a company that deals with the international community in South Africa. So anybody investing in South Africa, we'd like them to speak to us. So we profile, if you like, public diplomacy in South Africa. We work with the diplomatic community, we work with mining houses, the retail sector, the banking sector, and communication. So the idea is to profile South Africa and to get investment into South Africa and communicate, if you like, the good news about South Africa when it's there. Okay, well, that's obviously a very important role that you play then, and hopefully it will be embellished in the future. Listen to this. It says about 10,000 jobs could be lost in the mining industry. That's according to NUM's General Secretary, France Bellany. He was on Power Lunch 10 days or so ago. I was quite impressed with the way he conducted himself. He said, we are talking about 10,000 jobs lost. He told media on the sidelines of the COSATU conference that I alluded to earlier on. The industry has already lost 4,800 jobs, he says, between February and June. What is your reaction to this? I mean, my reaction, first of all, is that the commodity business is a cyclical business, and you can't always control what's happening in the international markets, which influence prices, of course. Absolutely right. The fundamental here is that the commodities sector, metals in particular, we are price takers. So the price is set internationally. It's set in London, and the same holds for gold. It's the same holds for coal. And of course it holds for platinum. So when the price is up at $2,500, obviously there's greater exploration, there's greater investment and greater production. But with the price being flat at around about $1,700, it means that certain mines have become quite marginal. Despite the fact that we have huge resources of platinum, they've become marginal on the international market. So an event like Marikana makes management and investors and the international community, after all, look at South Africa and say, can we produce this metal at a reasonable price? Are our costs too high? Do we need to structure, rationalize? Do we need to become more capital intensive? And I think that's the cycle we're into right now, Lindsay. This is the precursor of what I think is going to be a cycle of cost cutting in our mining sector.
What I'd like to know, if, in your opinion, is have we mismanaged the goose that lays the platinum eggs? In other words, it wasn't so long ago that platinum was $400, $500, $600 an ounce, and we seem to be doing quite well. How can costs have escalated so dramatically? It's not just labour, is it? It's not just the oil price. There must be something else that we've done wrong.
Yes, you're quite right. It's hard to forecast cycles. I think the super cycle of commodities is now coming into question. As much as the Chinese economy hasn't come off, it's come off the boil of double-digit growth, and now we're down at sort of 7% and 8%. And clearly that goes to motor manufacturer, catalytic converters and the like. And South Africa will feel that, but there's a lag as far as that price impact is concerned. Secondly, mining houses have to invest over the long term. They have to take a 15 to 25-year term view on their investment. And whilst this is cyclical, they do have to retain profitability. So I don't think this is the end in any sense, particularly given our reserves of platinum. But this is just one of those periods where we're having to cut costs, we're having to trim jobs, we're having to look at prices, and we're having to wait for that cycle to get into an uptick phase, if you like, particularly driven by China and Asia again, and possibly the African economy itself. There's some hope in the future there too.
Yes, indeed, and the recent events have given a stark reminder of what South Africa means to the platinum group metal industry worldwide. The platinum price was just below $1,400 an ounce 2 days before Marikana, the tragedy of Marikana, unfolded, and it shot up to over $1,700. Okay, it's back down at $1,630 or something like that now, whatever the price is. But it just shows you if South Africa cuts back on its production, the price is very, very sensitive to the upside. And I suppose that does work in one's favour, and again demonstrates the cyclicality of the resources business.
It does indeed. I mean, those are all acute observations. There's a question now as to whether, given South Africa's resources, we can do anything about the price. Whether or not, because of our monopsonistic position that we hold 80 to 90% of the platinum metals groups, whether we can do anything about that price. And this is probably one way of doing something. If you close down a shaft, which is the case now, then clearly production drops. If demand stays level or equal, then ergo the price should go up. Now, there may be a way of South African companies or mining houses actually not manipulating the price, but turning those platinum mines into profitability given the fact that these are price takers, and the only thing we can do is to cut costs to get profitability back up again. Become more capital intensive and cut jobs. And this is, I think, the point that Frans Boleni's made, and this is the concern of COSATU. It's one thing to come up with a once-off 22% wage settlement, but that has a knock-on effect in the entire mining sector and beyond. That in turn challenges profitability. And this has long-term consequences if this super cycle is going flat. So it's a serious issue for our country. And one more point that you raised there as well. It is no coincidence that the Marikana tragedy made world headlines, not just insofar as it was a massacre or a tragedy in human terms. It was the implications globally of production in platinum that caught the world's attention, which is a bigger issue for South Africa more broadly and in terms of investor sentiment.
Yeah, one of the things we have to worry about, on top of all the things that you've just spoken about, of course, is what's happened overnight. The Chinese manufacturing data has shown that that sector of the world's second biggest economy is shrinking. The Eurozone manufacturing data came out as well. That's its worst performance on an initial basis anyway. They have 2 or 3 revisions, but initially it looks as though it's the worst for 39 months. And the Eurozone's so incredibly important for platinum group metal demand with diesel engines and the strict emission controls that they have in that part of the world.
Absolutely, and California too. So the United States economy, the EU, if you put those two together, that is really the major recipient, if you like, of our platinum, or the use of catalytic converters. And frankly, it's not a metal that's diversified. It is concentrated within that particular sector. So as much as we're cyclical, our production is ingrained, if you like, into a global value chain, and therefore the price will be hypersensitive to that. So we're facing a situation where platinum mining is becoming increasingly expensive. There's demand for improved corporate social responsibility, housing. A call was made on one of the non-executive directors of Lonmin, Cyril Ramaphosa, to do more about black economic empowerment and corporate social responsibility today, which of course COSATU is calling for as well. But that is a cost. It may be a very sound investment, but it's immediate or short-term cost that is in fact counter-cyclical at the moment.
One thing that we must worry about, and I think that the people at COSATU this week must be behind closed doors very worried about as well, is that if these job cuts come through and if the mining sector losses continue apace, as Mr. Boleni suggests they might, then there could be unions, the traditional union infrastructure, coming under pressure and becoming more and more fragmented as disillusioned workers get seduced by more militant sort of union offshoots, if you like. And that's a very dangerous situation.
Absolutely, that's a very sharp observation. If there are 3 losers in this, clearly the mining industry has lost. There's been the human tragedy, but what the consequence of Marikana and this crisis for COSATU, the NUM more broadly, is very acute. The fact that Vavi left the Congress yesterday was unprecedented to go and intervene in a potential strike. They see the importance. There's the potential of fracture unions. It's happening in the chemical sector. The criticism of NUM has been the most public element, I think, of this whole crisis beyond the human tragedy. And I think that COSATU has been chastened by this. And I think that in one sense, the tragedy has made COSATU more realistic, perhaps more attentive, and to get back to the needs of workers and to, I think, build those bridges back with their membership base, which clearly they've been losing. The only way the Marikana situation could have happened was that COSATU lost control of its membership.
We'll leave it